Happy new tax year! The start of a new tax year is the perfect time to spring clean your finances. Here's a few updates from the Clearcut team on the thresholds of allowances for this tax year.
The personal allowance remains at £12,570 for this tax year. This is the amount of income you can earn before you have to pay income tax. If you, your spouse or your sole partner don't use your full personal allowance, you can transfer 10% of the unused amount to each other by using the marriage allowance, providing the receiving spouse is a basic rate taxpayer. The basic rate band remains at £37,700. This means that your income between £12,570 and £50,270 is taxed at 20%. After this, income is taxed at 40%. Anything that you earn over £125,140 is taxed at 45%. If you earn between £100,000 and £125,140, then this portion of your income is taxed at 60%. This is because your personal allowance of £12,570 is tapered down on a sliding scale for every amount that you earn over £100,000. You have a savings allowance of £1,000 for basic rate taxpayers and £500 for higher rate taxpayers. This allowance is lost entirely for additional rate taxpayers. You have to pay income tax on any amount earned in interest over these thresholds. There have been some changes to the tax on child benefit. Currently, child benefit paid to those earning £50,000 a year, clawed back via the tax system on a sliding scale. In this tax year, the threshold has changed to £60,000, and the rate that child benefit tax is charged is halved, so people will lose their full child benefit once they earn over £80,000.
The capital gains tax allowance is halved from £6,000 to £3,000. This is the amount of profit you can earn when you dispose of an asset before tax is due. Gains, in other words profits, that fall into the basic rate tax band are subject to a 10% tax charge, with an 8% surcharge for property. Gains that fall into the higher rate band are subject to tax at 20%, with an additional surcharge of 4% on property. This is reduced from 8%.
Having already been cut from £2,000 to £1,000 last tax year, the annual dividend allowance for this tax year is being halved once more to £500, meaning any dividend income in excess of this will be subject to tax. Tax rates for dividend income remain unchanged. Basic rate taxpayers will pay 8.75%, higher rate taxpayers will pay 33.75%, and additional rate taxpayers will pay 39.35%.
Pay into your pension. This could be a workplace pension or a personal pension. The annual allowance, which is the maximum you can pay into your pension, has increased now to £60,000. Employer and employee contributions both count towards your annual allowance. If you own a company, you can offset your pension contributions against your corporation tax bill each year. The maximum you can pay into a pension each year is limited to your UK relevant earnings. UK relevant earnings is largely your employed earnings. Pension, rental and dividend income doesn't count towards those UK relevant earnings. Basic rate taxpayers will receive 20% relief on all contributions made. Higher rate and additional rate taxpayers will receive a further 20 and 25% on top of that. If you do not have any net relevant earnings, you can still contribute to a pension. You can pay in £2,880 and you'll receive tax relief of £720, which gives you a total into your pension of £3,600 each year.
ISAs remain a tax-efficient way to save money, as you don't pay any tax on the income or gains held within the ISA wrapper. There have been some changes to ISA rules and how they will work in this tax year. The main one is that you'll be able to pay into more than one ISA type. For example, a cash ISA and a stocks and shares ISA within the same tax year. This will give you more flexibility on how you build your wealth and get the best savings rates. The annual ISA allowance remains at £20,000. There are also lifetime ISAs. The annual allowance for these remain at £4,000. However, this is part of your £20,000 annual ISA allowance. If you are saving for a house or retirement and you are aged between 18 and 39, you'll receive a 25% government bonus on contributions up to £4,000, meaning you could earn an extra £1,000 every tax year. If you're approaching 40, make sure you open one before your 40th birthday, as you will lose the ability to do so after. There are also junior ISAs with an annual allowance of £9,000 per child. This is a tax-efficient way to save for children or grandchildren. When they turn 18, the money is theirs, but they can't access it before this time.
The lifetime allowance has now been abolished. The lifetime allowance taxed at age 75 on any funds in drawdown and uncrystallised remaining funds has now been removed. Instead, there are new rules which will limit tax-free lump sum payments in lifetime and in death. The tax-free lump sum allowance has been set at £268,275, but it can be higher for those with lifetime allowance protections. Tax-free cash entitlement is still limited in the way that it always has, which is 25% of the value of your uncrystallised funds.
The full state pension in April 2024 is £11,502 per annum and is protected by the triple lock. You need 35 qualifying years to receive the full state pension, and it may be worth filling in any gaps. Transitional rules allow you to top up your national insurance contributions to increase your state pension entitlement. Currently, you can go back to 2006 to fill in any gaps in your national insurance record, but this opportunity ends on the 5th of April 2025.
There's been no significant changes to inheritance tax. Every individual has a nil rate band of £325,000. If you have direct descendants, such as children, and own your own home, there's an additional allowance that can be claimed called the residence nil rate band, and this is £175,000. This means that each individual has an inheritance tax allowance if they own their own home and have direct descendants of £500,000, and for a married couple this can be up to £1 million. However, you do need to be aware if your estate is worth more than £2 million, you do start to lose the residence nil rate band, and this could then take your allowances back to £325,000 per person. Once all your allowances are used up, then your estate is liable to inheritance tax at a rate of 40%. There are various exemptions. One of the exemptions is that you can gift £3,000 per year away of your capital. If you haven't used your allowance for the previous tax year, this can be carried forward, which means that in this tax year you can give away £6,000 of your capital, and this might help to reduce your inheritance tax. As always, if you have any questions, please don't hesitate to get in touch. We'll be going through all these allowances with you in your annual review meeting. Thanks for watching and happy new tax year.
How much editing do you have to do when you're filming these?
Are we rolling?
I'm going to start again.
Can I do it again?
No, I can't do it. Look at the camera.
I'll start again on that. A bit of a cough in the middle of it.
You can have the other. Start again.
Springfield to Spring Clean.